Hello everybody and welcome back to our weekly roundup of the cryptocurrency market on behalf of Apex Signals. I've got the 7-day chart for overall market capitalization open here, and we can see that we've had a relatively uneventful week this week. The good news is that we're still above where we started the week, or where we were heading into last weekend. And we had a little bit of a dip at the very beginning of the week on Monday, but we've since recovered back to where we were over the weekend, or the little peaks that we can see there over the weekend in the middle of the chart. So we're up at about 440 billion, and I hope that the relatively uneventful week, very slight growth, is a good sign of some consolidation rather than momentum starting to wane after the good run we've had. If we have a look here at the overall monthly chart, we can see that since relatively near the beginning of April, around the 10th, we've been on a nice steady upward curve. We've had a couple of minor corrections within that, but that's only to be expected. But we can see that the overall chart shape is set up positively, so we will hope that continues. We've definitely seen a fading out of the negative news that we had for a couple of months, which was around regulators banning ICOs in different countries and taking a sort of draconian approach. Since then, it's more been a case of more developed markets as well, such as in the USA and over in Europe, looking at more constructive regulatory frameworks, or starting to look at ways to shape those frameworks to build a safer, more sustainable market. And I think that's very much in recognition of the fact that the cryptocurrency market isn't going anywhere, and that the best approach, rather than pushing it into a gray area, is to start dealing with it and start to shape a suitable regulatory environment. We have a quick look now at Bitcoin, which is, as we know, the major bellwether for the cryptocurrency market. Its overall percentage of market capitalization has been dropping this year, although it is still very high, and personally, I think that's a very good thing. I think different cryptocurrencies have to start being more judged by investors or users on their own fundamentals, and less of a speculative market rush in one direction or the other, as Bitcoin moves up and down. So this is the 1 month chart. We can see here that we had a recent peak on April the 26th, and that was $9,736. That's from the CoinMarketCap data website, which averages the prices on different cryptocurrency exchanges, which, as we know, are not exactly uniform because there's no underlying market rate, and it's very much per crypto exchange pricing system, although there in most cases prices don't differ too much. And since that little drop after the April the 26th peak, we've seen a little bit of jagged movement back in the right direction. Hopefully we can maintain the upwards trajectory of the last couple of days into the weekend as we move forward. We have a look now at Bitcoin Cash, which has obviously had a very strong couple of weeks. You can see that big steep curve up, starting from around the 18th 19th of April, and towards the end of the month we did have a correction, and now we're again, after a little bit of volatility, we're moving back up in the right direction. Now the heightened interest in Bitcoin Cash is due to the impending hard fork, which takes place on May 15th. The block size will be increased to 32 megabytes from its current 8 megabyte size, and that should significantly increase transaction speeds, as well as costs, or reduce transaction costs, as well as significantly increase transaction speeds. And it'll be interesting to see. Now we're obviously starting to get closer to that 15th of May date, and it'll be interesting to see over the next couple of weeks, so we can start to shoot up again after a week where we've kind of jagged up and down within a channel. So we're now at above 1,500 today, or very slightly above it, and we were at 1,540 on April the 24th. So hopefully we can now push beyond that going into the next couple of weeks. If we move finally on to Ethereum for this week, there was a bit of a gaffe made a couple of days ago. Reddit's co-founder Alexis Ohanian, now he works with a VC that he founded called Initialized Capital, and they have a lot of interest in blockchain and the cryptocurrency market. And he had, in an interview with CNBC, predicted that Ethereum would hit 15,000 this year. That caused quite a stir, not least because we're currently at around the 750 mark. We were at 745 late yesterday. So to move up to 15,000 seems an extraordinarily aggressive bull position. However, he did actually come out yesterday correcting what he said. It was an error, and in fact what he wanted to say was $1,500 before the end of the year, which is a lot more realistic. Most of you who listen to this podcast regularly will know that I'm a fan of Ethereum, not least because it's the cryptocurrency which is used the most for now. The platform is the main platform for ICOs. That's likely to change a little bit moving forward with rivals such as AOS offering an alternative, but I still think that there is a positive outlook for Ethereum. I'm also a big fan person of AOS, and we've talked a lot the last couple of weeks about its own positive price movement. There was a counter position earlier this week as well. I think the company was called Citrus, or is called Citrus, and they're short sellers in the cryptocurrency market. One of their representatives had said that he expects a significant Ethereum crash in the near future, which I would be surprised if it is the case, but we'll see. I'm personally optimistic on Ethereum. And just to finish off, it's worth touching on an interesting hypothesis or forecast for the rest of the year, which is made by Sebastian Markowski of GB Bullhound recently. GB Bullhound is an investment bank which facilitates acquisitions, mergers, and deals of all sorts within the technology space, and also heavily involved in the blockchain space. And they came out with a report recently called Token Frenzy, the Fuel of the Blockchain. You can find that online, and it's a very interesting read. But basically the crux of the report is that their market forecast is a ramping up of the market over the next couple of months, with institutional investors starting to move in, and that pushing more retail investors back into the market, possibly in a mirroring of the end of last year. However, Markowski believes that this will lead to a crypto winter, which will see prices crash by as much as 90% right across the market and wiping out the vast majority of the thousand or so cryptocurrencies we currently have on the market. So it's a bit of an apocalyptic prediction. The good news is that Markovsky, who's the lead author of that report, believes that following that crypto winter, the market will consolidate. Those cryptocurrencies which do survive will come back stronger than ever, and the market will subsequently move from strength to strength. So it's an interesting outlook, and one that sounds apocalyptic, but then moves into a positive tone at the end. So let's keep an eye on that. We'll see. Maybe in November we'll be discussing about how that was right. That's all we have time for this week. I hope it's been interesting for you. Good luck with your trading over the weekend, and we'll speak again next week. Bye for now.